Welcome back, guys, to another video. And in this video, we're going to talk about all things regarding the Inland Rail project. Now, for those of you who don't know what it is, it's about 1,600 kilometers of freight line connecting Melbourne, close to Beveridge, all the way up to Brisbane or close to Brisbane CBD via inland through Victoria, New South Wales, and Queensland. And it is a massive project, right? It comprises of almost 1,000 kilometers of existing railway, as well as 600 kilometers worth of new track passing through regional Victoria and New South Wales. And the purpose of this is to have double stacked freight trains passing across the entirety of these states in under 24 hours to cut road costs, congestions, and all this other stuff. And this project has been in the works for an extremely long time, right? But we are not here to talk about what this actual project is, but we're rather here to talk about what is the impact on property prices, especially on these small regional locations. Because you can see that through this Inland Rail roadmap, which you guys have public access to, you can see that it passes through very key milestones, such as Beveridge, Albury-Wodonga, which is a massive regional hub. You've got Wagga Wagga, a huge regional location as well. And then you've got other parts like Parks. You've also got Dubbo, which is another major regional location, through Narrabri, all the way to Goondiwindi, and then across to Kagura in Brisbane. And along the stops, you'll see much more smaller regional locations like Juni, Narromine, which is close to Dubbo, Gilgandra, etc., etc., etc. But does this mean just because a massive $31 billion inland rail project is happening that you should be considering buying into these small regional locations? And those of you who have known me for a very long time know that I'm quite risk averse when it comes to buying in small regional towns like this one over here. And there is a reason why, because I don't invest solely based off a huge economical project. I look at the underlying factors of a regional's economy and decide whether or not it fits my strategy. Now, generally speaking, I don't like to look at small regional towns or populations with less than 40,000 people, but that's just only one factor. Let's take this one here, for example, in Park in New South Wales. When you look at this regional location and then you start to look at the data behind it, there's already a couple of things flagged with me straight away. A $535,000 buy price with a 4% yield is already quite low. Usually with that sort of numbers, you can achieve a better yield in another regional location. When you start to scroll down and look at the data, it's actually looking fairly positive. You can see no massive up or down trends throughout the entirety of its life cycle. And now it's also going on another bit of an uptrend over the past year, about 5% growth. And we start to scroll down a bit further, we can actually see that stock levels and demand levels haven't really picked up in the short term. So it's not one that has necessarily piqued my interest, but it's a location that's come up because of the Inland Rail project. And you can see stocks levels starting to reduce a little bit, but demand levels are sort of on the other trajectory. Now, of course, you can do a bit more further due diligence on the ground and talk to people and agents on the ground to confirm these findings. But first of all, on the data, it doesn't look overly positive, and inventory is going up overall, which is not a great sign to see. But the other thing that worries me about these small regional locations is that it's often tied to a certain type of economy, whether it's mining, whether it's agriculture. That's what usually happens with small regional locations. And when you start to look at the local economy of Parks and then you go to industries, for example, you can see that on the surface level, it actually looks fairly diversified into healthcare, agricultural, mining, retail trade. No sector takes up more than 25% of it. But the thing that does concern me is when you look at the regional exports of this location, you can see that majority of its economy, with 60% being mining as its largest exporter, roughly worth about $1.105 billion, which is a lot when you consider that Parks' economy is about $1.8 billion. So a majority of it is mining. And generally, when you start to do a bit more detailed research, you look at what they're mining. It's called North Parks Mine. And then when you start to look into it, it mainly looks like a copper and gold mining location. Now, of course, you can do some further due diligence into it. But generally speaking, when I look at locations to consider for investment, when it is tied to mining, and so regardless of what mining it is, for me, that's a risk factor beyond my risk appetite. Now, for other people, you may consider this. But for me personally, this would be sort of a no-go. And even though a massive project is being passed through the inland New South Wales, just because it passes through the necessary stops such as Parks doesn't necessarily mean there's going to be further investment or a further economical boost necessarily to that location, because it's simply just a stop. And fundamentally, when we're really comparing assets to asset, if I have to spend $535,000 to secure secure an asset in Park, I'd rather take that money and buy a small townhouse in Albury or even look at a small townhouse in Melbourne than taking my bets against this location. Now, it's not only this location, you can also look at other locations across this map as well. And when you start to look at some of these locations, like Narrabee, for example, here, and I should just simply search it up on my map, it's a location that is very, very small. And you start to do further due diligence into HTAG and you see whether or not this makes sense for you as an investment perspective. Again, $550,000 for a 4.7% yield in a small regional town in the middle of nowhere is not really my idea of an investment strategy. And I know when you look at this, it doesn't really look that bad in terms of historical price growth. It's gone a small uptrend and gone through stagnation and going through a bit of an uptrend again now as well. And even though the data looks solid, when you start to look at the local economy once again, it's once again tied mostly to mining. And you start to look at the regional exports, basically everything comes from mining. So if someone came to me and said, hey, would you consider this location for investment just because the Inland Rail project train line comes through this location? Would I consider it? No, I wouldn't, because the fundamentals of it doesn't make sense from a long-term hold perspective. And that is the type of investor I am. If you're a short-term investor and you want to hedge your bets, knock yourself out of the park, I'm not going to stop you. But for me, this personally doesn't make any sense. But would I see this as a big plus to the locations of Albury or Wagga Wagga? Absolutely. To Dubbo? Absolutely. You may even consider Narromine, because Narromine is at least somewhat close to Dubbo, which as we know, Dubbo has really started to pick up in terms of short-term data and historically has done quite well in terms of long-term data as well. But Narromine, once again, is that smaller sort of pocket. If I was able to get an asset, I would rather get it into Dubbo, which is a much more larger regional hub, than just in this small town over here. And by the way, as well, this Inland Rail project has been known for a very long time. In fact, construction started back in 2018, and that's a long time ago, right? So we have known about this project for the better part of 5 to 7 years, and yet there hasn't been too much investment into these other small regional locations, which often means that it's just going to be another stop in the route of this Inland Rail project and doesn't really make sense from an investment standpoint. Yes, it does bring construction jobs in the short term. Yes, you will need housing supply for those construction workers in those locations. But what is the long-term impact? Long-term, will there be much benefit to these much smaller regional locations because of this Inland Rail project? It's hard to quantify it. And honestly, if I was to hedge my bets, I wouldn't be investing into these locations. When I follow a philosophy of investing, I look for safe investment opportunities that I can buy, set, and forget, so that when I sleep at night, I don't have to consider or not will this project then impact the local economy for it to grow in value. So if you guys are making a decision about investment, please don't just make it off one sole project alone. Yes, economic projects are very good for investment, but it is not the only criteria. It must fit other criteria as well for you guys to consider it. And like always, guys, if you have not already, make sure you are subscribed to the private community, because we talk about these projects and other projects every single day within the community to make sure people are making the right decisions about which locations they're investing in. You don't want to be purchasing a $500,000 to $1 million asset in a crap location. You want to find good quality assets in good locations for the long term, and we can help you make those decisions and ascertain the right path forward. So if you need help, jump into the private community right now. It's $35 a month. It has insane value for you guys. Till next time, thank you very much.